want to talk about tax withholdings, and in particular, tax withholdings from IRA distributions or other qualified accounts. Seems to be a lot of misconception or misunderstandings of how to calculate what needs to be withheld from those types of distributions. So this will be a real high-level view of how to go through the math. Everyone's situation is a little bit different, but this should give you a good understanding anyway of how to go through the math to figure out what kind of taxes need to be withheld. So the first thing you're probably going to want to do is an internet search for the federal tax tables for the year 2023. Along with that, you typically will see the 2023 deductions that are allowed as well. If not, you'll want to do another search for standard deductions for 2023. So those tax tables that you see show what they call all the different marginal tax brackets. So if you look at a married filing jointly, from 0 to 22,000 is taxed at 10%. So that's the 10% marginal bracket. From 22,000 to 89,450 is 12%. That's the 12% marginal bracket, and so on. Your effective tax is what the actual tax is owed divided by your gross income. So let me explain. If you're married, filing jointly, and let's say you have $100,000 of income from IRA distributions, let's just use a standard deduction of $27,700. If you can itemize this, that will only make the picture look better, but everyone can take the standard deduction. So you subtract the $27,700 from the gross income of $100,000, which leaves you with a taxable income of $72,300. So from there, you look at the tax tables, you'll see that the first $22,000, if you're married filing jointly, is taxed at 10%. So that's $2,200. And then you'll see the next $50,000 will be taxed at 12%, and that's $6,036. So total taxes owed are $8,236, which if you divide your gross income into that tax owed, it gives you what they call your effective tax rate, which is 8.23%. So even though, again, that last dollar was taxed at the 12% marginal bracket, your effective tax is 8.23 because 22,000 of your income is taxed at 10%. So now let's move and say you're single, same gross income of $100,000. Your standard deductions will be less. You can only deduct $13,850 from that. That leaves you with a taxable income of $86,150. Again, now let's go to the tax tables. The first 11,000 marginal bracket is taxed at 10%, so that's $1,100. From 11,000 up to 44,725 is in the 12% marginal bracket, so that's taxed at 12%, or $6,687. And then from 44,000 up to 86,150 is taxed at 22%, which is $9,113.50. You add those all together, and your total federal tax owed is $16,900.50. Again, divide your gross income into that $16,900. That gives you your effective tax of 16.9%. So again, even though that last dollar was taxed at 22%, your effective rate is 16.9 because a big portion was taxed at 10, a portion was taxed at 12, and just a portion was taxed at 22%. As far as state taxes go, that's really going to depend on the state that you live in. The state of Illinois doesn't tax IRA distributions or pension income. Some states tax all of it. Some states tax a portion of it. So it all really kind of depends on what state that you live in. There's no what they call FICA tax, which is the Social Security and Medicare in any state, so you don't have to worry about that. But everyone's going to have the federal income tax. And that's just kind of a real simple example of how to figure out what your effective rate is and what you should be having withheld from any kind of IRA distribution. So I hope that helps. If you like the video, please feel free to like, and always don't forget to follow. Thank you very much.